Hello and welcome to your Daily Five with Jane Gallina. I'm also known as Airplane Jane. You can reach me on Twitter, Instagram, YouTube, LinkedIn, my website, cjanetrade.com. And if you ever have a question, feel free to email me at jane@cjanetrade.com. Well, this week is quite interesting. It is the end of the fiscal year for the US. New Year starts October 1st, and we're seeing that the currencies are being affected. Just this morning, this news came out. UK pensions hit with 100 million margin calls as gilts and sterlings slide. In case you're like me and you didn't know what a gilt is, that is the equivalent of a US Treasury bond. So there are at least 3 LDI managers requesting emergency capital. They have margin calls going on. What does this remind you of? To me, it reminds me of 2008. Oh no, the banks are requesting bailouts with margin calls, right? They had margin calls based off of their mortgages. Well, these are the pension funds. This is even more scary because these are people's retirements that we're talking about. Now, when I think of a safe haven, right? Cash is great as a safe haven. When we start to see a downward turn, a bear market, a recession, high inflationary period, cash tends to be good. And we're seeing that the Great British Pound is dropping right now. So we have to look at the dollar index. Do you want to be in dollar indexes in the market or in physical cash? When we look at the dollar index, this is a sample from DXY, that they measure it against the euro, the yen, the pound sterling, Canadian dollar, Swedish krona, and the Swiss franc. So when all of these 6 currencies are dropping, automatically it makes the US dollar look stronger. However, that could be a bit of an illusion, right? Because they could all be decreasing in value, but the stock chart looks amazing as a currency, right? We have the US dollar here. It's moved up to highs that we have not seen anytime recently. And all of the other currencies, those top 6 currencies, are dropping in value. It does look a little overbought, right? With that RSI and our MACD, we are reaching new heights. To me, money in the market, in my opinion, is best actually cash in hand. Do I mean cash in the bank? No, I mean physically in hand, in a safe, in your house. Or, I've been talking about it a lot this year, silver, right? Metals tend to do very well during a high inflationary period when the buying power of those currencies drop. And we can see right now on the silver futures, right? We have an inverted head and shoulders. This is a nice little bullish sign as long as we can hold this left shoulder of the inverted shoulder. This is our daily chart. When we look at it on that weekly chart, hey, we are testing a support level, right? Even more confidence. And we pull it back even more onto a monthly chart and we go, whoa, wait a second. What happened in 2008? Well, that's when we had the meltdown. And look at what happened. We had major movement from roughly 7 up to 40 for silver. We're at a bit more of a pricey investment point, but we can see that we're hitting a long-term support area. Metals tend to do well, right? They are used in so many different industrial uses, the highest reflective metal, the highest conductive metal, and fairly inexpensive, right? It's a fairly inexpensive metal at this time. So barrier to entry is not that hard for people. So when we look at this, metals tend to do well over a recessionary, high inflation, downward turn in the markets when we have contraction. We have, my goodness, I think we've got 22 Fed members speaking this week all about monetary policy for the fiscal year going into starting October 1st. And we have not managed the inflation yet. We need to have the interest rates equal or greater in order to be able to manage that inflation. So what's going to happen to the buying power of the dollar? Well, everything's going to increase in cost, right? So if we have metals, they go up in value, we see a return on a physical asset versus a dollar in the market, right? That might be going downward. Or my personal positioning is cash for further investing once we hit that bottom, but I need to see the dark pools buying at the bottom, right? We can also look at gold. Gold is another great move. I think, in my opinion, that we're going to see gold move down a little bit further, roughly down to 1,600 an ounce before we see a bottom period coming in. We can see it here over here, right? It looks like we have a bit more of downward movement before we hit support. We have a bit of a free fall range right here to chop to the downside. And then as long as that support comes in, it looks like we could have a bigger upward move coming. We're down at low RSI 31 on the weekly as well. Now, I'm not going to say, hey, let's just get in and catch that falling knife. No, this is something where I would need to see support. That's why I do like the silver chart better. I see support. I see an inverted head and shoulders that is presenting itself on that daily chart. And as long as like I said, we can hold that left shoulder, I like it. Gold would be my second pick, right? And when we look back over time, again, we look back at the 2008 period, we had a downward turn and then a nice big move to the upside, right? So large potential of returns. This is roughly 750 over here, all the way up to roughly 2000, a little bit less, call it 1800, right? So you've seen more than 100% returns on the metals during these tough economic times. And when we're looking further, right, we look at the SPY. This is our weekly chart. This is not looking pretty. We've had that downward turn. You guys know, or maybe you don't know, but I do follow the dark pools of the market. This is where that big money is moving. Well, what do we see? We saw selling up here at the top, selling right here, and selling right here. Until I see buying, I'm not a fan of this. In fact, we have a big megaphone presenting itself, right? Let's see how good my drawing skills are here, right? We have a big megaphone, which means downward movement over here, right? Roughly 325 over there, maybe 340. If we go below that, where's our next big support level? Roughly around here, 265, 270, right? So we have some bigger moves to come, in my opinion, in the markets. And so looking at protection of capital or potential growth, seeing that pension funds are now requiring margin calls, and looking back at 2008 bank bailouts, I am not personally trusting the banks as much, right? And I feel like at this time, physical assets would be better. We do have a bit more. We have that same little megaphone on the Qs, right? Looks like we have a bigger drop potential for the Qs at this time. We could come down here, roughly 225. If that doesn't hold, maybe 190s, right around there. So at this time, I'm looking at protective measures in the market until we have further confidence from the dark pools that buying is happening. We have seen a lot of silver prints. So if we go above silver print levels, then I'd say, yeehaw, let's go. Let's ride that silver stallion to the top of the hill. And then once we see that the dark pools are coming back into the market, all right, it's time to get back into equities and further positioning. If you guys would like to join me, I do have a members watch list live every morning on YouTube at 8:15 Eastern. And that is Your Daily 5 with Jane Gallina. Carpe profit, seize those profits one trade at a time.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.